Ladies and gentlemen, I would like to welcome you to our virtual annual general meeting. I am your host, Stephanie Harrison, Senior Marketing Manager at Mayberry Investments Ltd. I'd like to thank our viewers and shareholders for tuning in today. At this time, I would like to invite the Executive Chairman, Mr. Christopher Berry, to call the meeting to order, after which Mr. Erwin Angus, the Managing Director, will begin the day's proceedings with a prayer.
Good afternoon, everyone. Let's get the show on the road.
Thank you for that, Chairman. I now invite Mr. Angus to say a prayer.
Okay, let's pray. Gracious God, we thank you for taking us through another year as we meet to review what has passed and focus on what we intend to do in the future. We know, Lord, that our best days are ahead of us. We know, Lord, that last year we were challenged by a strange phenomenon. But we know, Lord, that we are on the road to serious recovery. And so we bless you, Father, and we ask that as we move forward, we will focus and not lose, Lord, what our main mantra is, which is to transform lives through our relationships with our clients. We thank you for our clients who have supported us over the years, and we know, Lord, that as they do well, we will also be blessed. So, God, we thank you that you are here with us, and we leave everything into your hands as we seek your guidance, Lord, for the future, knowing that although we were challenged in the last year, we know that as we move forward, we'll always be successful because we put you at the front of our plans. So we pray a blessing on our chairman, on our board of directors, on all our employees, and also all stockholders, Lord. We pray that you'll bless them as they continue to support us in everything. In Jesus' mighty name I pray. Amen.
Amen. Thank you, Mr. Angus, for that prayer. I now invite Chairman Berry one more time to establish the quorum in order for the meeting to start.
Mr. Secretary, do we have a quorum? Yes, Chairman. We have a quorum. Well, today we're having a virtual meeting, and the terms of the meeting as approved by the court allows us to have 2 shareholders and the board. So we have today with us Mr. Walter Scott, Mark Berry, Mr. Gladstone Lewis, and Mr. Gary Peart. Thank you all for being here. So right now I'm going to do a short year-end review, and then after that we're going to have a presentation by Mr. Peart. The Mayberry Group for 2020 calendar year reported a consolidated net loss of $698 million. Last year, the stock market fell by about 22% in value. But the company, the stockbroking firm Mayberry itself, Investments, reported an 84% improvement in profitability of $499 million compared to $271 million the year before. From the first quarter 2020, the economy started to slow, and by March, it was clear that COVID pandemic would not only affect Jamaica, but the entire world. Despite this, our trading arm did well, producing revenues of $421 million versus $395 million for 2019. Funds under management grew to over $20 billion. The main lines of business within our asset management unit were pension fund portfolio, which grew at 18.4%. Investment grade bonds returned 5.4%. On our platinum portfolio grew by 6.3%. During 2020, our investment banking department, which is one of our star departments, brought Caribbean Assurance Brokers to the junior market, and in that process, they ended up with 3,000 new shareholders. They rose $4.5 billion in debt for clients, and also did several private equity transactions. We closed the year by paying 12 cents dividend, which was reduced because of the uncertain conditions of last year. Looking ahead, we will continue to build on our resilience while enhancing our network of investment advisors to ensure that they are prepared to provide our clients with expert advice that they have come to expect from us. Each Mayberry client has their own advisor. We're the first company in Jamaica to adopt this level of customer service, and we maintain it to this day. We have invested a lot in our digital platform, and basically what this does is it helps clients to do more on their own, get faster service and more information without having to sit on a phone talking to people for regular mundane stuff. So, the digitization process continues. We're investing a lot of money in that, and that will continue throughout next year. Over the years, Mayberry has been committed to giving back. We have several projects which we are invested in, like our swim meet, which unfortunately didn't happen last year. Many community groups, education, and also religious groups. I'd like to close by thanking everyone, all our stakeholders, for working with us over the last 36 years. I hope everyone is able to remain safe and make it through this COVID period. Thank you very much.
Thank you for that, Chairman. I now invite our CEO, Mr. Gary Peart, to make his presentation. Welcome, Mr. Peart. So before we introduce Mr. Peart, I just want to take a moment to remind you that prior to our AGM, a notice was circulated informing shareholders that they could submit their questions ahead of the AGM. That being said, we're going to go ahead and get into our Q&A segment. Our CEO, Mr. Peart, will be answering the submitted questions at this time.
Okay. Good afternoon. So I've been instructed to present first and then answer questions after. Our vision, which guides us in everything that we do, and also for our employees, transforming lives positively through lasting relationships. This is the ethos of Mayberry, building, maintaining, and getting new relationships. This is the order for today, 2020 highlights. We'll go through financial performance. We'll speak to some things that's happening for the first 3 months of 2021, shareholder value, and also a little touch on the price of the stock and also the work that is being done by our foundation. So 2020 was a very, very tough year. It's actually, I think, in the history of Mayberry in our 36 years, it was the first year that we were faced with such a significant challenge. But most importantly, it actually proved that our business model was sound, which I'll get into before. Because sometimes you don't know how good your model is until it is severely tested, and that's what we saw in 2020. So this chart shows the movement in our financial numbers for the period. And I don't know if the camera will see me, but I'll walk a bit and show people certain key things. Do I walk with this? If I can take it out. Yeah, so I love this graph because it shows the resilience of Mayberry. So in 2015, we had a net profit of $145 million and a comprehensive income of $2 billion on shareholders' equity of $6 billion. You know, and people would ask the question, you know, can you have a sustainable model investing in listed companies in Jamaica because the stock exchange is so illiquid? But if you'll notice, between 2015 and 2019, which is, 5 years, we have been able to grow the equity of the business by almost $10 billion, approximately $9.2 billion. So we've seen an increase of almost 150% in just 5 years on a business model that is based on investing in the local stock exchange, as well as other trading activity, which I'll speak to. But here's the test. As I said, 2020 was the roughest year ever. So our equity grew to $15.4 billion in 2019. And then you saw an unprecedented sell-off in 2020, in March 2020. That first quarter of 2020, Mayberry lost almost $7 billion in book value. But if you notice, we completed 2020 with a net reduction in our equity of approximately $4 billion. But wait, the net book value in 2020 was $11.6 billion after one of the worst sell-off ever in the history of the stock market. And you will notice, even after that, at $11.6 billion, it still exceeded the net book value of the business in 2018 of $10.8 billion. So, again, this is tested in the fire, and it showed that the business model is sound. So after the worst year ever, we still came out in a position that we're able to preserve almost 100% of the gains that we had from 2015, and we'll continue to build on that. And I want to take the opportunity to thank my fellow directors on the board, my fellow employees, especially my executive management team, but every single employee of Mayberry, and most importantly, the customers, without whom this could not happen. And we were there for you, you were there for us, and as a team and family, we were able to show that Mayberry is not just here for 1 year, but it's going to be here into perpetuity. So this graph, again, shows you what I described. You see the significant downturn for 2020 in our total comprehensive income. And again, for 2020, a lot of our business lines saw significant reductions, which is why you see the revenue created from $2.5 billion to $600 million. So we were able to find little nuggets during that process. Our investment banking team still held up, even though we had to shelve a lot of IPOs that we were negotiating and some private equity transactions, but life continued. This is an area of Mayberry that a lot of people don't fully appreciate. And it shows that Mayberry is actually a very diversified financial institution. So what you would see is that in 2019, net unrealized gains was the largest contribution of 35%. And that was followed by dividend income. In 2020, especially with the sell-off of the equity market, you see where we were still able to have unrealized gain on other assets of 29%, because we had other assets outside of equities that did well in that period. And net foreign exchange gains actually increased to be a larger percentage of when compared to 2019. So what you see is that we have different business lines that even when our main business line pulls back, they're there to supplement the income and move forward. As in most entities, when things get tough, you have to rein in the operating expenses. And this graph shows where most of that action occurred, which is primarily in operating expenses. And this is a slide, especially for some of my favorite stockholders, you know, because people tend to forget that dividends is important. And what you find is that even though the book value is $9.66 in 2020, the dividends that we've paid over the years approximate almost $2. So you'd have seen where the dividends paid to date is almost 20% of the stock price. This shows the asset and liabilities. Investment banking, the chairman spoke to the listing that we did in 2020, Caribbean Assurance Brokers. We would have done more, but again, I think this area was impacted significantly by COVID because the valuations on the market cratered. So, you know, people took a decision to step back and to see and wait out until multiples came back. Our treasury and trading department did extremely well, especially on the foreign exchange side, and you'd have seen the gains in our numbers accordingly. Our asset management. This actually is the largest untapped potential of Mayberry Investments. And we actually are quietly growing this portfolio. And if you look at some of the returns, which I don't think a lot of people in the marketplace realize how well we've been managing our assets for third parties. You'd have seen that for 2018 and 2019, the individual pension funds had a return of 32 and 22%. Obviously, in 2020, because the IRP was highly weighted in equities, it fell off to 16%. But more importantly, the superannuation pension fund portfolio, whilst giving returns of approximately 24% 2018 and 2019, was also able, notwithstanding the fall off in equity markets, to give a 4% return. And we were able to give very good returns on our US managed portfolio, peaking even after COVID of 8.7%. And on J dollars, you're able to earn 4%. In the midst of all this, anytime there's a crisis, anytime there are liquidity issues, anytime the stock market sells off, everybody gets very jittery because there's a lot of red ink around the place. But what did you see at Mayberry? Because of how well we manage the business, we've seen where we have systematically increased our regulatory ratios. And in 2020, at the end, as I said, of the worst pandemic that we've known of, Our capital to risk-weighted assets was 16%, which is 60% above the minimum of 10%. And also our Tier 1 capital ratio was 97%. It should be noted that we're almost 100% above the minimum in 2019, which created the buffer to absorb all of that impact in 2020. So what you saw is, notwithstanding that significant sell-off in the equities market, we were not only able to manage and thrive, but we were also way above the capital asset requirements and the regulatory ratios that we had at a point in time. This is a graph that, there are people that ask certain questions, especially about the price of the stock. And you've seen where systematically we've been growing the equity of the business. And that's what we look on. We look on the pricing. I mean, whether people want to ascribe different multiples, we focus on growing the net book value each and every year. We had a setback in 2020, and we spoke to that before, but ultimately we believe in 2021 we'll continue regaining that ground. This is our dividends to date. The graph before would have shown the separation between the value and the dividends, but the actual number is $3 billion. So since Mayberry has listed in 2005, we have paid over $3 billion in dividends to date. And I think that is a significant achievement. In 2020, thank you very much. At the start of 2020, we actually paid a dividend, but it was below the traditional dividend. And again, that was a function of prudence. It was just in the middle of COVID. We weren't sure what was going to happen, so we decided to err on the side of caution, and we went very liquid. And in keeping that liquidity, we decided that we would reduce the dividend that we would normally pay, because you want to go through the uncharted waters, and then after you come out on the other side, we can then relook and make a decision. But again, the key point here from inception, $3 billion in dividend. So that's 2020. 2021 so far has been spectacular relative to 2020. And it shows that Mayberry has not only rebounded from those lows, but have actually started to thrive, and thriving very well. So you have seen that the year-to-date net profit is currently 127%. The comprehensive income is up big time, over 100%. And we've done pretty well. And this graph basically shows it to September. You'd have seen that our comprehensive income year to date is $1.8 billion, and that compares to a $7 billion reduction last year. Our net profit is $700 million relative to a $900 million loss last year. So we've turned around pretty well. And as I said, 2020 showed that our business model is the right place to be. And 2021 further justifies that, because we have immediately rebounded. And that's it in graphical form. So, to what matters? I'll take a little time here. So, this graph starts from December 2019, and it ends 30th of September 2021. And you'd have seen that COVID was March of 2020 when there was a significant sell-off in the stock market. So what you're seeing is, despite our wonderful performance in 2019, the stock is trading on or around $5 to $6. We've gone through COVID, it has remained relatively flat, it's bouncing in between the 5 and 6. We've come out of COVID, we've recovered, you've seen the numbers for the 9 months, but the stock still trades in between that $5 and $6 range. A lot of my shareholders ask the question, why is that so? So, my answer to them is simply this. If you look on the net book value of the business, you will see that consistently the stock trades below the net book value of the company, which really shouldn't be the case. It actually goes further. When we work out the average price to book for the financial sector, it comes out at a figure of 0.92 times. And if we apply that to our business, it suggests that Mayberry stock should be trading at the very minimum of $10. So what you find is that the market is mispricing the Mayberry stock, and you're looking at a 40% differential depending on how you do the calculation, 40 to 50% differential. But as I say to somebody, I'm very clear that at some point in the future, people will realize that the stock is underpriced. And what it does, it allows those who know better to find some shekels and keep buying at $6 because you have a significant uplift to get there. Before I go on, I wanted us to toggle back to the comprehensive income over the period. Because again, the question was asked earlier of me, about the Mayberry stock price. And let me find that chart. No, let me find a chart. Yeah, there we go. So, if you look on the graph to the extreme right, looks like an inverted V. So what is happening is that people value companies in many different ways, right? We just focus on creating value. So what has happened is that the accounting philosophy, IFRS, etc., dictates different ways in which you should account for your different assets, etc. However it is, we're always in constant conversation with our auditors. But the long and short of it is very clear to us that the analysts in the market are not necessarily clear on how to value the Mayberry stock. And so if you follow through, people value stocks in one or two ways. The simple way is earnings per share. You apply a multiple and you get a price. There's a book value, which we spoke to. Mayberry is in a position where we don't get the benefit of the multiple. We don't get the benefit of the book value. And we lose the best of both worlds. So the comprehensive income, a lot of it is driven from the gain on our equities. So what we've seen is that equities market has done phenomenally well from 2015. But our gains on the equities market does not go to our profit and loss, which is what most people see. But if it did, what it would show is that in 2017, the EPS would be equivalent to $2. And it rises to $3.94, almost $4 a stock. The average PE on the main market is 20 times. So really and truly, 20 times 4, Mayberry should be trading around $80 in 2019. And as you see, it never passed $19. Yeah? And even the turnaround year to date, where we have generated $1.8 billion in comprehensive income, that corresponds to a price of around $1.40, etc. Applying that 20 times PE, that would suggest a price of $30 a share. So at the very least, the stock should be trading somewhere around the book value minimum, which is around $11. But certainly, any analyst looking on and understanding how we classify our investments, it should really be trading north of that. Long and short of that is that $6, I think, is a very good buy. Moving on, the other thing that's near and dear to our hearts is our Mayberry Foundation and how we work and help others in our ecosystem. And we've spoken to stuff like, swimming championship, financial literacy through our forums, which we've been running for over 20 years. And a critical point, because this is very topical, whilst in the midst of COVID, and we understand the issues with vaccinations, and we've seen scenarios where there are different entities, people across the world that's mandating vaccinations. Mayberry has taken a decision not to make vaccinations mandatory. And what we have chosen to do is that we have chosen to spend a lot of money on educating our staff and to a lesser extent our customers on the importance of being vaccinated. So we believe everybody should be vaccinated, but we don't believe that we should make it mandatory that they be vaccinated. And we have been pretty successful, we believe, with our employees. And we have not yet achieved 100%, but what we have done, we have undertaken significant resources in educating our employees who are not there. And we believe as we continue doing that, we will achieve 100%. Again, this is a list of all the sponsorships and charities that we have engaged with over the years. And thank you. So I understand there is a Q&A. Okay, so I'll read the questions and provide the answers as I go along. With the recent BOJ rate hike, how will Mayberry Investments position itself to maintain its net interest income or source cheaper funding? So Mayberry has been pretty liquid, and so we're in a position where whether interest rates increase or whether they come back down, we will be making money. As you can imagine, especially if you have a lot of cash and interest rates go up, you would expect your net interest income to increase, which is what we expect if that does manifest itself and stay as it is. Can you provide details on the Musson property deal, Chalmers Commercial Limited? No. The answer to that is that we have a 50-50 joint venture with Musson on the property on Chalmers. And when we liquidate any development, we will make that public and in keeping with the disclosure requirements of the JSE. Mayberry Investments is looking to acquire 20%. Is Mayberry Investments looking to acquire a 20% stake in SVL between Mayberry Jamaican Equities and Mayberry to make it an associate? Note, Mayberry Jamaican Equities now owns 18.127 directly in SVL. Mayberry collected 1.16 billion through the sale of 10% of MJE to connected parties in August, and SVL makes more than half of MJE's balance sheet. At the MJE AGM in June, you, Gary Perrott, answered that you were fine with your stake in SVL, yet you bought more in August. If yes, would SVL be classified as an associate due to your representation, yourself and Chris Berry, on the board of SVL? So that's a pretty long question. So the answer to the question, at the point of the AGM, it wasn't something that was on our radar, but as you know, things change, values change, and if the opportunity does arise, yes, I think we would take the opportunity to go to 20%. And based on my understanding of accounting, if we do get to 20%, I believe we would have to consolidate as an associate company. What does Mayberry plan to do with the 1.16 billion? Invest it, like we do with all other cash that we have. With the company becoming more efficient to its work-from-home policy, will the company be looking to rationalize itself further in short order? So the answer to that is that Mayberry always had a work-from-home policy pre-COVID. Pretty much you were able to trade anywhere in the world. And certainly on our executive team, we've been working from home long before COVID. In addition to it, so it's nothing new to us. Coming out of COVID, we're seeing a significant increase in business, as epitomized by the increase in assets on the balance sheet. And what we find and what we expect is that as we automate and digitize our business, if there's any spillover, those individuals would go to a front-facing side of our business, our sales advisors, etc. So we don't necessarily expect there to be any net reduction on that. Are there any major public offers that can be expected in short order by Mayberry Investments? Well, that's our core business. We have an investment banking business, and we raise capital, public and private, for companies. So yes, the expectation is that we would be looking to have some of those deals down the road. Is Mayberry choosing not to pay out any dividend this year due to the need to preserve capital in this environment? So the answer to that question in 2020 was yes. The dividend was 12.5 cents that we paid in 2020. We thought it was prudent to preserve our cash. A lot of the shareholders might not be aware, but at our meeting yesterday, Mayberry declared a dividend of 32 cents a share that will be payable on December 20. And the reason for that is we have a certain amount of cash that we generate each year, which forms the base of the dividend. And so we generated that in the COVID year, now that we feel sufficiently comfortable that we're on a path, a positive cash path, we felt that we would pay a dividend in keeping with our normal dividend plus the dividend that we didn't pay out last year, which is how we arrived at 32 cents, which I think my fellow shareholders will be very happy for. Will Mayberry Investments look to offer new products and further differentiate yourself? The answer to that is yes. Why won't you allow the public to watch the Mayberry and MJ AGMs after the AGMs are complete? The videos are private at the moment. Well, it's our way of incentivizing our shareholders to attend in person, or in virtual. So we spend a lot of time and effort to make people aware that the meeting is happening, and we appreciate that everybody turns up and views it at the point in time. Where does Mayberry Investments see itself in 2022? Bigger and better. We think we're very prepared. We have cash. We see where our main investments are coming back. We have significant opportunities for new investments, and we think 2022, would be a much better year than 2021. I think the authorities have a better feel for the COVID challenge, and as well, my fellow Jamaicans are in a much better place in terms of managing COVID and how to deal with COVID. So I think business will be coming back a lot better for 2022, and we're properly structured and positioned for that. This question is for the chairman. Can the mandate of MJE be changed to allow for it to invest in the securities outside of Jamaica? Chairman?
Yes, it can be, but it won't, not at this time.
So the chairman's answer is yes, it can be, but at this point in time, we're not looking in that direction. The next question is actually for the BDO auditor. When MJ owned Blue Power and other associates in 2016, only Blue Power had no board representation by Mayberry Investments or MJE. Thus, my question is, with 25% voting rights in Lumber Depot Limited, why wouldn't MJE be required to classify Lumber as an associate? Does IAS 28.9 fall in here? Balvin?
Thank you. Good afternoon, everyone. All right, just a quick answer to that question. I'll just draw reference to IS 28, paragraph 6, which speaks to, apart from the voting rights, significant influence is also another factor that is taken into consideration. So one can own less than 20%, but because there is significant influence, it can be treated as an associate. And it can also, in the other way, more than 25%, but if significant influence is not considered, then it is not treated. So, thank you.
Thank you, Balvin. And that concludes the questions. At this time, I would ask Balvin to come back and present the auditor's report.
Thank you again, Mr. Parrott. Independent Auditor's Report to the members of Mayberry Investments Ltd. Report on the audit of the financial statements. Opinion. We have audited the financial statements of Mayberry Investments Ltd. set out on pages 98 to 164. Which comprise the group and the company's statement of financial position as at 31st December 2020, and the group and the company's statement of profit or loss, statement of comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising significant accounting policies and other explanatory information. In our opinion, the accompanying financial statement give a true and fair view of the group and the company's financial position as at 31st December 2020, and of the group and the company's financial performance and cash flows for the year then ended in accordance with International Financial Reporting Standards, IFRS, and the requirements of the Jamaican Companies Act. Basis for opinion. We conducted our audit in accordance with International Standards on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibility for the audit of the financial statement section of our report. We are independent of the group and the company in accordance with International Ethics Standard Boards for Accountants, International Code of Ethics for Professional Accountants, including International Independent Standard, the IESBA Code. And we have fulfilled our other ethical responsibilities in accordance with the IESBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters. Key audit matters are those matters that in our professional judgment were of most significant in our audit of the financial statement of the current period. These matters were addressed in the context of our audit of the financial statement as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Expected credit losses in respect of investment securities and promissory notes, loans. See Notes 2J, 14, and 16 to the Consolidated Financial Statement for management-related accounting policies and disclosures. At the 31st of December 2020, investment securities and promissory notes at amortized costs, net of provision for credit losses, amounted to $23 billion, or 72% of total assets of the group. Impairment provision of $291 million have been recognized for the group. Under IFRS 9, establishing the criteria for determining whether credit risk on the financial asset has increased significantly since initial recognition, determining the methodology for incorporating forward-looking information into measurement of expected credit loss, ECL, and selection and approval of models used to measure ECL required significant judgment. We focus on the impairment assessment as the assumption used for estimating both the amounts and the timing of future cash flows are complex and involve significant judgment by management. How our audit address the key audit matters. We assess and test the design and operating effectiveness of the control over impairment, data, and calculation. These controls included those over identification of which investment securities and promissory notes were impaired. We determined whether we could rely on these controls for the purpose of our audit. We challenged management's process by examining a sample of investment securities and promissory notes which had not been identified by management as potentially impaired, and then from evaluation form or judgment as to whether that was appropriate. We evaluate management's model development for validity and review the forward-looking assumptions and judgments incorporated in the model. We test the completeness of management's listing of potentially impaired promissory notes by reperforming the process using management's impairment criterion. Where impairment indicators have been identified, we examine the forecast of future cash flows prepared by management to support the calculation of the impairment, challenging the assumptions and comparing estimates to external evidence where available. We evaluate the performance of the investment securities and promissory notes portfolio subsequent to the end of the reporting period to identify significant adjustments, subsequent events, and did not identify any such events. Based on the audit evidence obtained, we determine that the provision was reasonable. Other information. Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statements and our audit report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and standalone financial statement does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statement, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements, or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibility of management and those charged with governance for the financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with IFRS and the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of a consolidated and standalone financial statement that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statement, management is responsible for assessing the group's ability to continue as a going concern, disclosing as applicable matters relating to going concern, and using the going concern basis of accounting unless management either intends to liquidate the group or to cease operation or has no realistic alternative but to do so. Those charged with governance are responsible for the overseeing the group's financial reporting process. Auditors' responsibility of the audit of the consolidated and standalone financial statements. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statement as a whole are free from material misstatements, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISO will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if individually or in the aggregate they could reasonably be expected to influence the economic decision of users taken on the basis of these consolidated and standalone financial statements. As part of an audit in accordance with ISO, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedure response to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal control. Obtain an understanding of the internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and the related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to events or condition that may cast doubts on the group's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statement, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or condition may cause the group to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosure and whether the consolidated and standalone financial statement represent the underlying transaction and events in a manner that presents a true and fair view. Obtain sufficient and appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our opinion. We communicate with those charged with governance regarding, among other matters, the plan, scope, and timing of the audit, and significant audit findings, including any significant deficiency in internal control that we identify during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence, and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence, and where applicable, related safeguards. From the matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of the financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefit of such communication. Report on additional matters as required by the Jamaican Companies Act. We have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been kept. So far as appears from our examination of those records and the financial statements which are in agreement therewith, give the information required by the Jamaican Companies Act in the manner required. The engagement partner on the audit resulting in this independent auditor's report is Donna Opsu, BDO Chartered Accountant, 25th March 2021. Thank you very much.
Thank you, Mr. Van Riel. Chairman Berry will now bring us the ordinary resolutions. Shareholders are advised to use the links provided in the live stream chat to vote on resolutions. You will be required to provide your JCSD number when voting. You will have 30 seconds to cast your vote. And for the shareholders in physical attendance, you may show your hands. We received proxies from shareholders totaling 1,045,839,987 shares, representing 87% of the shareholding of the company. Chairman Berry, over to you.
Okay, the first resolution is that the audited accounts of the company for the year ended December 31st, 2020, together with the reports of the directors hereon, be and hereby be adopted. Do I have a proposer? Ian Lidler. Seconder, Andrea Hosang. As said before by Stephanie, we have votes in the amount of 87% in the affirmative, and the resolution is carried. The second resolution is that the interim dividend of $0.125, that's 12.5 cents per ordinary stock unit, be paid on unit paid on July the 1st, 2020, to ordinary stockholders on record as of May 22, 2020, be approved and declared as the final dividend for the year ended December 31st, 2020. This resolution has also been carried via 87% voting proxies. The third resolution is in several parts, and it deals with the re-election of retiring directors. And the first is 3A, that the retiring director, Mr. Conrad Berry, be and is hereby re-elected a director of the company. This resolution has also been carried, and it was proposed by Ian Laidlaw and seconded by Andrea Hosang. Resolution 3B, that the retiring director, Mr. Gladstone Lowers, be and is hereby re-elected a director of the company. And our proposer is Andrea Hosang, and our seconder is Mr. Ian Laidlaw, who also happens to be a long-serving employee of the company, as well as a shareholder. And this resolution has been carried by votes as tallied by the Secretary of the company. And Resolution 3C is that the retiring director, Mr. Erwin Angus, be and is hereby re-elected a director of the company. And this is being proposed by Ian Laidlaw and seconded by Andrea Hosang, who is a long-time shareholder and employee of the company. This resolution has also been carried by an 87% vote in favor. Are there any more resolutions? Resolution 4, that the board of directors of the company be and are hereby authorized, board is, to fix the remuneration of the individual directors for the ensuing year. And that's being proposed by Andrea Hosang and seconded by Ian Laidlaw. And this resolution has been carried. Resolution number 5, that the directors' appointment and remuneration of PricewaterhouseCoopers as auditors in respect of the period with the conclusion of the next annual general meeting be and is hereby ratified, confirmed, and approved. Proposed by Ian Laidlaw and seconded by Andrea Hosang. And the ayes have it once again. Ladies and gentlemen, thank you for participating in our annual general meeting for the year 2020. Be safe. See you next year.
Thank you, Chairman Berry. That's it for today's meeting. Thanks again to our viewers and shareholders for participating in our annual general meeting. We look forward to yet another productive year, and we'll be looking forward to your participation in the future meetings. Thank you.